Namaskar, hello and welcome friends to Finavision, your one-stop solution for CFA exams. My name is Shushmit Aditya Mukherjee. I'm an educator and an investment research analyst, and this video is a short excerpt from the full class series for CFA Level 3 curriculum. Hope you enjoyed this video. Let's get started.
Ex ante versus ex post expectation. So here, what do we mean by ex ante and ex post? Ex ante means it is in the future. We are just predicting it, right? And ex post means it has already happened. It has already happened in the past and now we are trying to analyze it, right? Ex ante versus ex post. Now this has expectations of the future. Whatever expectations are there of the future, that actually impacts the actual events, right? That actually impacts the actual events. Let me take an example. Let's say there is a rumor that a bank is going to go bankrupt. Bank is going to go bust. Now, people start running towards it and taking out their deposits. People rush towards the bank and take out their deposits. Now, what happens because of this is the capital ratios go haywire and the bank, even if it was not supposed to default, it actually defaults. Now, this is called self-fulfilling prophecy. Let's say a currency XYZ, a country ABC has a currency XYZ, and people of this country ABC have lost trust in the policymakers, and they have lost trust in the currency also. Now, what can happen is this currency can get into a spiral of hyperinflation. 10%, 20%, then 50%, then 100%, then 1000%. This can be the way inflation numbers can come out. Once people lose trust in the currency, these are the numbers that can come out. And this has happened before historically in multiple scenarios. So this is another kind of self-fulfilling prophecy, you can say. So what is happening here is people are expecting some event. People are expecting some event A to happen. People are expecting some event A to happen. And because of that, they are taking certain action. So people are acting based on this expectation. Actually, this action is causing the event. This action itself is causing the event, and to either the event or the exaggeration of the event. Now, this brings us to the peso problem, because we are talking about Argentina here, right? Now, what happens in a peso problem is you underestimate the risk of the future. You underestimate the risk and you overestimate the return. And based on this, you set up your expectations. And ultimately, in the future, you see that the risks were much higher. The risks were much higher, and probably the returns were much lower. So this is called the peso problem, where you underestimate the risk in the future and overestimate the return in the future, right? Then we will talk about a reverse scenario where the risks are overestimated. Risks are overestimated, and therefore, obviously, the returns become of less utility. The utility of the returns become less because you have overestimated the risk. Let's say you try to analyze stock market data. You try to analyze stock market data of 3 years, 2 of which are 2007 and 2008. Right? Now it is highly likely that you will overestimate the risk. You will overestimate the risk and hugely underestimate the return. This is the reverse case of peso problem, right? This is the reverse of peso problem, where you are overestimating the risk and underestimating the return. Now we spoke about data biases and data errors. We spoke about peso problem and the reverse of peso problem. Now we'll talk about method biases. Analysts can sometimes be biased in their methods. Now, those biases can be majorly of two kinds. One is data mining bias.
The link to the full class video is given in the description below. Please check that out. Thank you so much friends for being with me till the end of this video. If you enjoyed this video, please like the video and subscribe to the channel for more such classes. Share your feedback in the comment section below and share this video with a friend who may find this helpful. For enrollment to practical application courses, internships and CFA curriculum classes, check the description below. Till then, keep watching Finavision. See you in the next class.